All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 26th, 2023. We'll start with the swing portfolio and then move to the snipe of the day. That's my plan. All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 26th, 2023. We'll start with the swing trade portfolio update. So this one is just designed to give me an opportunity to exercise the zero state. So we had Tesla from an oversold condition, had a nice swing, uh, and then it immediately reversed. And I considered yesterday getting long here. It was so close to the RL10 peak, and I was in a non-zero state here, having been bottom ticked out, and I didn't want to chase. So I watched it close well, and then was determined to buy a continuation trade on this one today, and then it gaps up 10%. So the emotional entry would have paid off with a very large move. Uh, and so what I did was just practice restraint, and I noticed halfway through the day that it was holding this price level above 155. And so on the resumption intraday, on a Kata 2 style, made my swing long with the standard risk box, and now we're long Tesla. So that's just going to happen sometimes. In Devon Energy, yesterday we took the PSAR flip that held at the double bottom. It closed well, and today it continued to work higher. I'm going to move my stop about halfway up today's range to the edge of the PSAR and lock in this much gain on Devon. Feels pretty good. If it continues to go higher, because it has cleared the RL10s, this is a candidate to add a second position, all other things being equal. CVS we saw as a Godzilla yesterday and the day before and the day before that, and that's what a Godzilla looks like. It was oversold dramatically on a 10-day, a 30-day, and a 150-day look back, and the 5-day volatility and 1-day volatility yesterday were abnormally quiet. And so today, after yesterday's PSAR flip, it continued. So we bought it with this risk box here in pink, and all it did was move straight up. That also made a very good turbo trade. I like the fact that it cleared this resistance, and so this is another candidate tomorrow for another intraday trade, as a continuation of its move off of extremely sold off conditions and abnormally quiet volatility. So this is the epitome of the Godzilla pattern for the sniper. So this is good to go. Listening to last night's discussion of CVS as we talk through that trade would be instructive. This is U.S. Steel. The metals have been poised to move. Yesterday, on the breakout above the peak of the RL10, we entered with a standard risk box. Risk is here. It closed well yesterday. Today it sold off a little bit and then closed very high and got through the peak at 28.75. This will be a candidate for intraday trading tomorrow and looking to increase the swing. So that one worked pretty nice. Ethereum, uh, over the last week, this once promising Kata 2, where we had signals to get out here and here, finally I took it yesterday at here to just get a scratch. We saw this yesterday. I was still not in the zero state, so I missed that. Decided not to take it. It closed pretty well today. It did not fail, so I think tomorrow I'm just going to watch this one. I'm not persuaded that it has legs. It feels like it's saturated, if I can use that word. I'll watch it, but that's low on my priority list to trade because it did not have much follow through here today. It was indecisive, so we are stalking that one. Real estate, on the other hand, which we got the PSAR here on about 5 days ago, with a standard risk to the belly of the RL10. This has fought through some turmoil, broke above the previous RL10 peak, feels pretty good. We've got this much of a gain in hand, and so I feel like at this point it's time to put a stop in at the PSAR, and then look to add another position if it takes off and keeps going, because this is also a 30-day high and really getting ready to go. And I like IYR as an alternative to tech and the other staples, and it pays a little dividend. So this actually feels pretty good. I'm really liking IWR. McDonald's, I finally, but you heard me suffering through this one yesterday, where we had been short from here, and it just was refusing to fail. And so today I just took the micro loss on this one and got long. When we zoom in on that, that's actually a pretty good looking trade. Yep. So that's what the trade looked like today on the 30s. So we're long from 272.75 with about a dollar, or no, about $2 of risk. This is the pink box here, and it closed really well. And you heard me suffering yesterday trying to figure out why I was short McDonald's, and this is doing nothing but caught a 2 recoveries and then it closed at the high of the day. So this feels pretty good. I like the stop and reverse there. We talked yesterday about Mexico and Brazil both looking pretty good, and 5 days ago we got the Kata 2 emerging dragon long here, and I said last night that if it could eclipse this peak RL10 action in here, I would add a second position. It did that, so we got a second position here at 58.25, and yes, today's stop until then was here. So I'm gonna, I think, just nudge that one to about 58.30 and get that second position in the money. So now we get 2 positions in the money. It closed very well, and so I'll be intraday trading that one as a turbo also tomorrow. So I like where Mexico is going so far. So it's made a new 30-day high today, and as you can see, if we look back, that thing is free and clear. There is no resistance in sight anywhere. So that one feels like we tapped into a nice mover. Brazil is essentially in the same spot, although it has more ground to cover, but it doesn't hit resistance until about, call it 31.70. So it still has this much room to continue to grow, but it looks to me like it's cleared all of that resistance and is starting a new leg up. So I like that one. And we're holding the entry from yesterday here on the Kata 2 standard risk box drawn to the belly of the RL10. I mean, an aggressive play would have been here yesterday, um, but I opted for the wider stop. So we're about an R. We're about +1 R into this one, and I would consider that to be a strong candidate for second position tomorrow. So a lot of the swing trades are working right now in the early days of their moving out. So we'd like to try to tap into that. Treasuries, I was reluctant to put that one on, but the pattern was too clear. It struggled yesterday, and today had a little give back, but still closing pretty well. So we've got this much in hand on this much risk. So I feel like I need to put a stop in on that one. I'm going to take, I think, just below the belly of the RL10 and the PSAR flip so that I can lock in this gain. I want to lock that in from our entry here. Because as we're going to see today, we just moved into bull quiet, and that's going to bode well for the stocks and not so much on the Treasury. So I want to make sure that I protect against the drawdown on this one. Clean energy. We had that really nice trade here. We got a micro win on that short. This once promising long reversal hit the wall where you would expect, and we did not get out here, and then we're just lucky to get out with a scratch. And then yesterday we took the PSAR flip with the standard risk box, so that thing's slightly underwater. I'm going to keep my stop right here. So let me move this up to here, and we're just going to let that grow, and we'll see. Give it a few more days, see what it wants to do. Meanwhile, the marijuana short is just dominating. You might have thought that there was no short side movement left, but in fact, after this micro win, we took the collapsing dragon here, a second collapsing dragon here, and now this thing is down at 610. So that's on about a 10 or 15 cent risk from 7, and so that's almost 9. That's about 8R on the first position, and then 1, 2, 3, about 3R on this one. So we're about 11R into this one right now, and that means I think we can put our stop right here, which would give back about 1R on 2 positions. So we're at 11, and if that gets hit tomorrow, that'll, worst case, that drops us to 9, and that one feels pretty good. So that's the swing trades. Everything's moving out. I think we got a good exposure on the long side. That one I think has a chance to recover tomorrow on the more positive feelings in the market. So I don't want to let an 11-hour swing trade slip away. So note to self. But we got about a half a dozen other ones that look like good candidates to do some turbo trading intraday. And I'll be set up and prepared for that tomorrow. All right, sniper trade of the day. Griff asked me, am I using the R3 for the MMRB? No, I'm eyeballing that on those swing trades and looking for what seems to be a significant PSAR flip or the belly of the RL10 like a dragon. And those are typically close to an R3. It's much less than a frog box anyway, but it gets it well started intraday. It's not as tight as the R10, but most of those are just by eyeball and what looks like a manageable risk box. So the theory behind that sounds something like this. The intention. If I've got a an RL10 price that did this, and now is starting to roll back up, right? you can bet that the PSAR box looks something like this. And then somewhere around in here, it flipped. And then the PSAR, when it flips, goes to where the belly of the RL10 was. So that's the start, conceptually, of a new PSAR trend. And you'll notice that the way we got those things timed, it's not unusual to see 10 to 30 dots of a trend once it gets going. So the moment when it flips is like a light switch, and it tells us that this just might be the turning point. And so the price that tells us that that's not true is a violation of that minimum on the RL10, or where the first PSAR dot gets drawn. So if my entry is somewhere here where where the PSAR flipped, and if my risk box, the theory behind that action is that if this truly is a trend reversal, then it's not going to violate that price, because if it does, then all the guys who were winning on the way down are going to be heartened by the fact that it's continuing to fail, and it's normal then to see a bunch of selling pressure come in, and that's why the collapsing dragon is our favorite pattern. So the argument for this SSC trade is that if I get this trade and I'm long, then that price level should hold. So I know that I can manage that box, because I know what my intraday MMRB is, and that's smaller than this one. So I just set that risk box equal to that PSAR flip generally. And then because I'm using the 30-minute bars, I'm giving it 1 or 2 or sometimes 3 days at that price level to get some traction and get going. And then if I see something where it went up, held, and now is continuing, then it looks like that new low point is the new support level. And then that tells me I can probably safely move my stop up to just below that and lock in that gain. So I'm looking at this one strictly by eyeball and the chart pattern with the PSAR flip and the turning points of the RL10, knowing that if that trade's going to work for us, we're likely to see 10 or 20 or even 30 bars of the PSAR in continuity. Okay. And in terms of relative size, the pure intraday trader, that MMRB, the R10 MMRB is the smallest, then the R6, which is about 1.5 times that, and then a frog box is typically going to be in here, and that's going to be close to the R3. And then as we start looking at the transition to swing trading, then it's like 1 ATR, and then maybe 2 ATRs. And so depending on whether you are day or swing trading, the size of these standard boxes for risk can vary, but it's geared towards the time frame that you're working in. And the ones intraday are much more driven by statistics, because you have to make lightning decisions, whereas the swing trades doing multiples of ATRs are more technical in nature. So what I'm doing with the 3, 30, and daily idea is that when I'm intraday, I'm in 3-minute charts, and when I'm doing 30-minute charts, I'm actually straddling. It's like a very slow day trade or a very fast swing trade. So if I have a turbo position and it really is working well, I want to try to convert that tentatively to a swing trade. And so I go up to a 30-minute bar and then use the wider risk box geared off where the PSAR flip is. And as long as that pattern is still in play, like that lower limit hasn't been violated, I feel good. And then if I get 1 or 2 or 3 days and it's continuing to grind up, then I can go ahead and go from the 30-day to a daily chart, and then just use the patterns off of that, and then maybe I'm using 1 or 2 ATRs as my increment of a manageable swing box. If that really looks good, I'd love it when I can convert that to a 3-day or even a 9-day bar. And then I turn what was a day trade into a tentative swing trade, into a pure swing trade. And then out here, I'm really looking at position trades where I want to hold those positions, weeks and months at a time. But the risk that I took with my capital was carefully managed here. By the time it gets to be one of those, I'm using markets money that was earned from that trade really to fund that longer term risk. So I try to grow it from seeds up into the longer term positions. Like right now in my very long term account, I'm holding some positions in UNG, natural gas ETF, that were 100% paid for from some turbo trades. It was an intraday trade series that did so well that I could buy the entire position with profit from that intraday trade. So that was like somebody just here's a lottery ticket. Here is some ownership in UNG that cost you nothing. And my hypothesis is that UNG is never going to go to zero. That there will never come a time when natural gas trades for zero. So I'm just content to let that thing ride forever, because it was actually free money. So this is the idea behind hybrid trading. Since we're here, is it going from day to like a tentative to a hybrid swing on the 30 to a pure swing, and then to like a hybrid position trade, and then a longer term position trade. So you got these pure systems here: day trading, swing trading, position trading, or what we would think of as the core, or the BMR. And then I can blend those by using these hybrid techniques, and I'm trying to grow the trade towards the longer term buy and hold. Excuse me. All right. So, meanwhile, back to the excuse me. Back to the sniper trade of the day. So this one is in U.S. Steel, and you saw this one becoming a nice swing trade. This is the turbo trade that we did on it today. So here's where it closed yesterday on 3-minute. Here was the, let's see, where's the gap up on this thing? Oh, here, it gapped up to here. And then it established the OR3. That first 3-minute candle is in blue. The second candle opened here, got this high, got to about here. Third candle opened, went to here. It ticked down and got us in. So now we're short. Excuse me, at the base of the opening range 3 candles. So we're short here. We got a standard R10 MMRB in. Now in this case, the R10 is appropriate because this is purely a day trade right now. And with my stop right here, all I'm trying to do is let this thing get moving far enough so that I can get my stop down to here and take my initial risk to my capital out. And then my worst case is it comes back and hits this, and I make the no lose plus dinner for 2. That's the psychological wedge that allows us to be disinterested with the trade as it starts to unfold during the day. When the worst case is that I exit and make some money, then it's a little easier to treat this as a simple science project where I'm concerned with numbers so that I can report that to a trade log in my journal and then study that and then put statistics on it to determine how the patterns and the rules are working like a science project. It's really important for me to get into that mental state. So the OR3 is simply an excuse to get in without further thinking. Excuse me. I'm sorry about that. And then I'm not surprised if this thing is going to come down and close the gap, which would be about, if that's 1 unit of risk, that's 2 units of reward. So just a simple just a simple fading of the gap is all that really looks like. And that's enough for a 2 to 1. So as long as I don't take more than a 1R loss, as long as I can get out of this, like it starts moving against me, as long as I can get out of there without taking more than a 1R loss, then this becomes a manageable risk box. And what I want is the minimum manageable risk box, because the smaller that box is that I can manage, if I can make the box even smaller, then I can get to 2R. I can get to 2R faster. And with the same dollars at risk, I can have a larger position size. So if my risk box is $1, and if I'm risking $400 a trade, if that's excuse me, I could conceivably have 400, and if I'm risking $400, that could lead me to 400 shares. If I'm able to trim that down to 50 cents, that same $400 of risk allows me to have 800 shares and still have the same dollars at risk. And then as long as I don't take more than a 1R loss, then this is manageable. Pardon me. We had the guys in the house. We're doing some home improvements, and they were sanding and painting today. I think I'm getting some residual friction here. All right, so we're short on the violation of OR3. We're looking for a 2 to 1 return here. In the next bar, that thing immediately went against me. So we take the minus 1R loss. So we're at minus 1. Then that immediately rolled over and fell through the bottom of the OR3 again. So I just take the same trade. It's still the same logic. And then that thing just collapsed like it was going out of business. And in this bar came all next 3 bars came all the way down here, got below yesterday's little support level, and by this time we're about 1 to 2.5 and falling like a rock. So I used the 2R battle drill, put the second position on, and then as that fell down to here and then opened up and started to fail again, you can be sure now that I got 2 positions on, we take that stop and run it down to about there so that I can lock in this entire move. That's now locked in. And the second position is in the money. We've got that little wedge. So if this reverses and comes up and hits my stop, we're going to have better than a 2R win. Check or hold? Okay. It continued to fail. And since we had about almost another 2R there, I put the third position on. Now it's monkeying around down here. So I want to have my stop pretty close for the same reasons. And then finally, after one more leg down, after this little hesitation here, it bottoms out, and then as it comes back up, I see the edge of the dragon right there, and I'm just as happy as I can be to get out of that right there, because now I've made maybe 1R on the third position. On this one, I've made probably 3R on that one, and maybe 5 or 6R on this one. So this this is somewhere around about 9R on that move. And I am filled with relief when I can get out of that. This is when I am under maximum pressure. And now that that deck has been cleared, and I'm back in the zero state, I just noticed the R10 has reversed. Let's see. The question was, would it be wrong to wait until the R10 flip instead of taking the trade on the first bar? Well, this one, are you talking about this one right here? That's actually that's the exit on those three short positions. Oh, the question was, would it be wrong to wait until the R10 flip? I was just using the OR3, just as a reason to get into the trade and start manage it without thinking too hard. And you have, when this is starting to fail right here, you don't know that it was going to run up here to tick you out and then fail again. You don't know that. And if you're waiting for this to occur, this thing might have just taken. I mean, look at what it did on on this next bar when it failed here. It failed that far in one bar. So if you don't take that when that lower limit is taken out, you'll be chasing this one forever, and you might not even have gotten a fill till down here, and you would have missed out on 3R. So those opening trades around the OR3, I just hold my nose and take them. I'm not even thinking about them. I just take them and get on with it. I do want to point out that the edge of the dragon here is turning out to be a really nice demarcation line, that while this thing is working, all the price action is below the dragon, and then when it reverses and touches the skin, that's a really good exit. It had 4 or 5 bars in here where it could have kept failing, but it didn't, so I'll just take it there. Instead of waiting for the PSAR, I don't want to give back that extra wedge, because that would actually turn that third position into a scratch, whereas by exiting a little quicker, that gives me about an R. So that now makes this pattern an SSC, because we have a clear, harsh winter. This thing is in play, but there was a reversal of the RL10. The R10 crossed the dragon. The PSAR was taken out, and we can draw our little wrist box, standard wrist box right there. And that's the same size wrist box as this one. Standard work. That's the R10 sized, 1/10 of the range stat. Standard work. So now we have the SSC, the supported spring crossing. That gives me a quick scratch. If this is going to work, it's supposed to work right away. It's supposed to go. But it did this, and then the R10 rolled over. So I now think it's not the upside trade at all. In fact, this feels like a high, a lower high. So I'm getting ready to get short as soon as it gets through the dragon. And then if it breaks through the belly of the dragon and the R10 here, then this thing could really drop. So that SSC turns out to be a scratch. There's the short with the standard risk box, checker hold. The RLXD crosses, the regression line crosses. And then it finds support at the PSAR and comes back up into the dragon. This is failure to fail further. So I turned that one into a scratch. So look how quickly, the conditions can change. You had a 9R win here, and now two quick scratches. It feels like we're kind of in a neutral state now. A different vibe altogether. As long as it wants to fail, I'm ready to keep trying the short side. I mean, you have a high, a lower high. Now the R10 rolled over again. So what would we call this entry? With a standard risk box right here. Caught a 2. Supported fall crossing. Now if this falls below the belly of the R10, that's going to be a collapsing dragon, and we could add a second position short right there. And that fails. I would be lying if I didn't say it was a comfort to have net 8R in hand from this trade. After you paid for the one here and a couple scratches, I gave this a little bit of room. I took the PSAR exit for half an R loss and then stopped and reversed here. This one feels like it's not a Kata 2 because you have the lower low. So I treat this one also as an SSC. And I just treat it as a harsh loss from here. And then here's the reversal. Checker hold. And that one goes nowhere. So this is just becoming a grind. The R10 reverses again. They all look the same leaving the station. There's the belly of the RL10, higher low, another higher low. It did not fail. So that's twice, here and here. This thing is supposed to fail and it didn't. So, fine. Take the long here, standard risk box. They all look the same leaving the station. Getting some traction. This one gave an orderly move. See it kind of oscillating between fall and summer and fall and summer and fall. And at this one, this was enough to get me out because I wanted to lock in 2. That's 1 unit of risk, 2 units of reward. Then when it reversed quickly, I looked back over and said, you know what? It's already back at yesterday's approximate close, so it feels like this has all been left behind, and this was a pretty nice rising triangle. So I put two. Now I do this maybe 1 out of 100 trades, but I put two positions onto that one. I'm basically using the two scoops that I just won and putting it right back on, because by this time the whole market's looking pretty good. And that one gives me about 4R, because that's about maybe 3. That's about 1.5 right there, maybe 1. If that's 1R, then I earn 2 because I have a double scoop on there. So that's a pretty rare event for me, but it felt correct. And Cliff and Nucor Steel were all going really well right now. And I considered that one, but we were getting close to the end of the day, and then I watched that one, that conservative move, miss another 2R into the close. But this is really a promising recovery, and I actually feel pretty good about U.S. Steel for tomorrow, because it got that high before it sold off hard, and then spent the rest of the day grinding its way all the way back up to that. That's a lot of buying pressure, and willing to hold it overnight as the market goes into bull phase, bull quiet, north of the 200-day moving average. Now, this is about a 12-hour day on the intraday in U.S. Steel, and so I can convert that. I can keep 20% and convert that into that 30-minute chart on that tentative swing trade, right? So now if I go back and look at the U.S. Steel swing, this whole entry is paid for, and I can keep that move from here. I could actually have two positions on this if I wanted, but I just decided that the money we made in here removes my initial risk on that trade over there. So now I can raise my stop up into here and genuinely lock in that gain. Okay. So this is now it's in a swing trade on the 30-minute, and then if it continues tomorrow, like above that close, I'm ready to add to the swing. So this is going to be a high pry intraday trade for me tomorrow. Okay. So that's the sniper trade of the day, check or hold. All right, here's the market. This is SPY on the 30-minute. So here was today's move. It took out the peak. So this is actually a positive sign. It's within shooting distance of the 30-day high at the black line at 410.5. And this has some strong double bottom Kata 2 action going. This actually feels pretty good. To go along with the fact that we just moved into bullish market again for the first time in over a year. On the daily, we're just noticing, the fall into the winter. Kata 2, it turned to spring. Kata 2 turned into the summer. Took out the previous peak. So this is all good right here. This was a really strong upward signal. And now the previous PSAR peak and the 30-day high, which was back here, both of those are in play now. This is the upside target, and if it breaks above 410, that's a new 30-day high, and that's good to go. And then when we look at the 150-day look back, again, you can see that today was a good close. It's within fighting distance of the 30-day high. So if it can get above that, you have to look all the way back over to here. You don't see any resistance until here. That's where these at 413 and 418 come from. Then the strong resistance at the peak of the dragon at 425, and then the peak of the RL10 at 430. And if it gets above 430, the next thing in sight is 470, which goes a way back. So this two-legged down painful sell has featured one, two legs up, one retracement, and now this is starting the second leg up. Here's a leg up, and this is starting the second leg. And all it has to do is get through 410, and this thing can now reasonably look at 430. So tentatively optimistic here. Quick look at the sectors from a distance. Again, S&P, our baseline, stuck in the middle of our tactical peaks and valleys here with a plus, 1.1%. The tech finally showed some leadership, up 2%. All of the other indexes were worse than the S&P. Emerging markets, diamonds, the Russell, and treasuries down a half. NVIDIA, Devon, and Cliff, which were the individual targets that we like, all performed really well. So there's Cliff, and here is U.S. Steel. Only Alcoa underperformed today out of the metals. So Alcoa continued to lag, but U.S. Steel and Cliff look pretty good, and they have some momentum going in tomorrow. But particularly with what you saw with U.S. Steel today, I really like that one. In the semiconductors, the three we watched there, NVIDIA, Intel, and then Texas Instruments in the semis. NVIDIA clearly has the juice, up 2.5. It is just going. Texas Instruments lagging. Intel kind of stuck in the middle, nothing special. And I like also that Devon Energy was up 2.5, so it was better than the energy sector, so that feels like it has some juice. So we've got a lot of opportunities for continuation of momentum for tomorrow and heading into next week. And most importantly, today we moved into bullish conditions. So let's take a look at the traders, see how they did today. Now, Tim, I got to talk to you about having the bullish bias. We shouldn't. I mean, going into today, we were in sideways quiet. That's the opposite of having a bullish bias. So here was the OR3. This is a potential short. And when it breaks the PSAR, you could almost get a second position here. And that trade is waiting. And then when it finds support, and you take it at the edge of the dragon, that's the move you want. That's what it costs to have a directional bias. I like this effort on the long side, and it had a quick loss, and you were able to stay out of the chop. Now, right around in here, when the Z3 lines start to expand, that was a potential trade. You wouldn't have lost money on that one. And then in Mexico, here's your OR3. So we were late getting in, and then we didn't get the reversal. And I think waiting for it to cross the VWAP is still pretty good practice. But as you start getting comfortable with EWW as a target, this little pattern here, and then a 1, 2, 3, you might be able to get it in the pocket. But still, that's a good trade, and you got paid. You stayed out of the chop mostly. Well, I take that back. You got short here, but it just chopped around. So when you see those Z3 lines compressing, that first one's okay, but you wouldn't want to add more positions in here. It has to really break out of there to be of interest tomorrow. So we got to eliminate those directional biases. Price has to tell you what to do, in my opinion. Here's Satya with First Solar. That's one of his specialties. He gets the like a 1, 2, 3 entry. So he's been specializing that. So when it holds at yesterday's low, that's a pretty low risk move because if this fails, now you're into a collapsing dragon. So that's the way, if you can put a MMRB off a recognized support level, then you can get that trade. Then he gets a K2 scratch, a micro win, micro loss. He was looking to get short here, but he didn't get the fill, but that would have paid off. He gets the PSAR flip and nails it. There was a COTA 2 here, and here, and here, and here, and here. So FSLR, folks, might be worth looking at. Good luck on your real estate exam. And 2.8, very nicely traded. Nolan, better on the COTA 2, but again, discipline. It's going to take 30 days, really, to make this part of your DNA, I suspect. Here's the OR3. Gets the long. He's out of it quickly. Doesn't let it get below the VWAP, and look, that thing would have failed all the way down here. He does notice the collapsing dragons. With discipline, doesn't chase. This K2 pocket here, I like that. I mean, you didn't wait for the PSAR flip, but you did recognize that it had crossed the VWAP and that the dragon made a higher low. That's a good pocket entry. I like that. You got paid a little bit here. Now on this one, that's a perfect short because you have a high, a lower high, you got the RLXD, and it's crossing the dragon, and you have a couple clear targets to the downside. So that's a really good short. Now it went this far, and then you got out of it with a 0.1. But then when it started to fail again, right where it's supposed to, we got to get short here or not later than here. And then we get this whole move. And then if you get that move from either one of those, you can't let it get past the edge of the dragon. So you got to take your exit somewhere around in here. Then here's your pocket entry. There's your PSAR flip entry. So we were late. And then overly risk averse. That's just nervousness and not trusting the system. Your stop is probably here at the bottom of the dragon. This was that little R10 wiggle that continues. That's a sign. That gets paid. PSAR flip. That's short for days. Entry 1, entry 2, and then cash at the edge of the dragon. And then this is a perfect leg 1. This should have been long instead of short. And then this should have been a re-entry as it crossed here. So this was a little bit late. So even with all of that, we're still 0.4, but this could have been, 3 to 4R on that one today. So better focus today. Microsoft feels like it's working for you. It's given some significant moves. And I like the fact that it was generally up and is becoming a tech leader. This was the first day of tech coming to the front as a sector for leadership, and Microsoft did pretty well. So I would not be surprised by further upward moves tomorrow to go into the weekend. We'll take a look at the reports now. So we'll look at dashboard 1. And for the first time in over a year, be still my beating heart, bullish quiet because we're now 2.5% above the 200-day moving average. So that makes us finally back into bullish conditions, and the ATR percentage is quiet. So we are in bullish quiet. That's the strongest market condition there is. We are well and truly overbought on all the dimensions except for the 270, which has improved to 43. That's all good. So volatility is to the upside is still within reason. The leading candidates, energy's coming back now. You got Chevron, ExxonMobil, you got the Caterpillar Industrial, and then Disney and Microsoft, the old reliables, are crushing it. Looking pretty good. And tech finally back in the lead as a sector, even if it's just for one day. In the large cap individual companies, got plenty of symbols on the auto framer. Had lots of dojis today. No other swing patterns. Big strong move here in Caterpillar. Should have been talking that up more. And then we got, I can't even read my own scribble now. Cisco and Chevron here. Or no, Chevron and Disney. Nice breakouts. Some weakness in IBM. Weakness in Intel. Strength in Microsoft. That's a very good thing. And then Tesla crushing it today. Very strong move in Tesla. In the ETFs, look at how far ahead of the U.S. the internationals continue to be. Emerging markets, EFA, Asia less Japan, Japan, Mexico, Brazil, all of them crushing it. And then in the U.S., real estate and mid-caps both doing well. The S&P breaking out a new 10-day high today. A little bit of strength here in energy and finance and in tech, XLK Tech. And then metals and mining, consumer discretionary. Hey, this was a broad-based recovery today in the ETFs and the sectors. A relief going into the bull is how I'm reading that. Handful of auto framers with the standard framing stats. A reasonable number of squeezes given the small intraday range. Tesla moving further as it continues to improve. It's now getting almost back to its longer-term fair value. That used to be 11 ATR below fair value. It's had a nice recovery. The clear winners, this is how many ATRs above their fair value it is. NVIDIA, Nike, Boeing, Disney, Intel doing pretty well. All of the Godzillas are in play. There's no more Godzillas in the S&P and the tactical because we've rebounded far enough off of the harsh sell-off and now in the middle of the pack and pushing into a bull market. All of the Godzillas are gone, and now we're starting to look at fireworks and fence sitters to the upside. Godzilla, King of the Monsters, doing his job. The last one he gave us, CVS, is well started today. So let's see how much, what kind of legs that has. Standard stats. The NDX, this will just show you how broad-based the gains were today. This is a market phenomenon. With just about everything under the sun doing well, with the exception of IBM. Something not right over in here. Walmart, Procter, Pfizer, IBM. There's something rotten in Denmark over there. When you see that much green on the short terms, I like to come over and say, who is the enduring leader? Caterpillar, ExxonMobil, bowing because you see all that green goodness there. Cliff is, except for the long term, Cliff is in pretty good shape. McDonald's, I'm finally glad I got out of that short and finally got on the right side of the play here. And then just about everything here in the ETFs. But real strength in Mexico. Look at it, green all the way across the board. Made a new 270-day high today, breaking out. So that's how strong Mexico is. I'm liking that one. The symbols with trading value, these are the ones that combine a large intraday range percentage and the reliability of a strong frog quality number gives you this kind of trading value ratio. And I like tracking the top 10 as trading vehicles. So for Nolan, Microsoft is up in there. Caterpillar's on that list. Brazil's on that list. Clean Energy on the short side. Alcoa on the long side. So some good targets in there. They're moving enough reliably to be good intraday candidates. Okay. All right, that's everything we got for today. We'll get this published and processed and in the can. I'm going to put a link on the homepage for essentially the Creativity 101 course as either free or for $99 as a introduction to our creativity work. And if you like that one, you'll love the long-term course, and that'll give you a $500 discount on the longer-term course if you want. So we're getting ready to start a new cohort in the middle of February, and 100% of the people who took the first 2 sessions were raving fans about it. And I can't speak too highly of that course. Yeah, it's really quite a home study course. I think you'll like it. All right, that's everything I got. We'll get this published and processed, and we'll see you tomorrow.